Okay, by a show of hands, who loves working a stressful, hateful job for 30 to 40 years, to pay off a massive mortgage, only to die of a heart attack at your desk, or be laid off without a pension? Anyone? Yeah, I thought so. That's how we felt too. And since we lived in one of the most expensive cities in Canada, that was a real possibility. So instead of drowning in debt to buy a house, we rented and invested instead. And guess what? Going against the status quo totally paid off. By not buying a house and investing instead, we managed to build up a 7-figure portfolio which has allowed us to retire in our 30s and travel the world. Welcome back to another episode of the Legends of the FIRE movement, where I take a deep dive into how they did it. Today we are looking at the story of Kristy Shen and Bryce Leung from Millennial Revolution. If I was to tell you that you could become a millionaire in your 30s, quit your job and travel the world in perpetuity, and you don't need to do anything overly exceptional like start a tech company or be an early investor in the next Amazon, you would either think I'm crazy or trying to sell you a get-rich-quick course. But that's exactly what Kristy and Bryce did. They have documented their story on both their blog and their popular book called Quit Like a Millionaire, which is about the steps they took to become millionaires in their early 30s and quit their corporate jobs to travel the world and pursue their passions indefinitely. How cool is that? How did they do it? Let's find out. Don't follow your passion yet. When deciding on what to study at university, Kristy narrowed it down to 3 options: creative writing, accounting, or computer engineering. Writing was her number 1 choice and her passion. The cost of education is expensive, so she decided to choose the highest paying career based on median starting salary to get the best value from the cost of education. Relying on your passion for income can be stressful when you have bills to pay. Even though she wanted to become a writer, she chose to study engineering and then used the money that she earned from her career to set herself up before becoming a writer. She is now a full-time writer and author and can now pursue writing purely for the passion and enjoyment, as she no longer relies on working for a paycheck. Your house is not an investment. Most people keep majority of their wealth in their primary residence under the assumption that a house is a good investment and always increases in value. Historically, housing increases at roughly the pace of inflation, but also comes with a larger number of costs both to buy and sell, finance, and also to insure and maintain the property whilst you live there. When buying a house, people become completely irrational, resulting in borrowing as much as the bank will lend them and committing to a lifetime of mortgage payments. Kristy and Bryce were following the status quo by saving towards buying a house, but as they started to look at houses, they realised that the local property market was absolutely crazy. Prices were high, and they ran the numbers and worked out that when factoring all of the costs of home ownership, it was far better for them to continue to rent and invest the money in the stock market instead. Investing strategy. Kristy and Bryce built up an investment portfolio of around $1 million over 9 years. They used index funds and focused on investing in a balanced portfolio consisting of 60% stocks and 40% bonds. When your portfolio gets to 25 times your annual spending, you could in theory withdraw from your portfolio using the 4% withdrawal rate. However, this puts you at the mercy of sequence of returns risk. The cash cushion and yield shield. Kristy and Bryce were nervous about sequence of returns risk and being forced to deplete their portfolio too much in years of market volatility. So they designed a portfolio with a slightly higher yield, including preferred shares, real estate investment trusts, corporate bonds, and blue chip dividend paying stocks. So if there was a period of poor market returns, they could move and live in a lower cost living area like Southeast Asia and live solely off the natural yield of the portfolio. They also have a cash cushion in a high interest savings account to cover around 3 years of expenses to prevent them from having to draw from their portfolio in a down market. What are they up to now? As well as travelling the world indefinitely, Kristy and Bryce spend their time doing non-profit work, novel writing, running their blog, and generally enjoying life. Beware of the FIRE naysayers. I often hear a lot of negative comments from FIRE critics or news articles claiming that FIRE won't work, etc. But in the words of Kristy and Bryce, let's be honest, life is full of risks. But the point of life is not never having to take risks. What kind of life would that be? The point of life is to take risks, but have backup plans in place. Other retirees are optimistic that everything will work out just fine. We are optimistic too, but we also like to carry a few parachutes just in case.